Imagine a commodity that is more essential than oil, more scarce than gold, and yet, for the last century, we have treated it as if it were infinite. We check the price of a barrel of crude oil every day, we track the price of an ounce of gold down to the penny, but we rarely ask the most important question: what is the price of a litre of water? In the 20th century, nations redrew maps and shifted alliances to secure access to black gold petroleum. It defined the geopolitical order. But financial analysts and strategic planners are now reaching a sobering consensus. The 21st century will not be defined by oil, it will be defined by blue gold. We are witnessing the early stages of a fundamental economic shift, where fresh water transforms from a public right into a privatized, financialized, and highly expensive asset class. This is the story of why water is destined to become the next global currency. To understand this shift, we must first shatter the illusion of abundance. When we look at a map of the Earth, we see a blue marble. 70% of our planet is covered in water. It looks limitless. But this is a visual deception. 97% of that water is salt water, useless for drinking or agriculture, without expensive processing. Of the remaining 3% that is fresh, 2/3 are locked away in frozen glaciers or hidden deep underground in inaccessible aquifers. That leaves us with less than 1%. 1% of the total water on Earth to sustain 8 billion people, growing industries, and the entire global agricultural system. For decades, this equation worked because the population was smaller and the climate was stable. But today, we face a supply-demand paradox. On the demand side, human consumption is exploding, not just for drinking, that is a tiny fraction, but for industry. Consider this. It takes nearly 3,000 litres of water to produce a single cotton t-shirt. It takes 15,000 litres to produce 1 kilogram of beef. And in the modern tech economy, data centers and semiconductor factories, the backbone of AI, consume billions of litres of water annually to cool their servers and clean their silicon wafers. As we build a more advanced digital world, we are paradoxically becoming more thirsty. On the supply side, the ledger is turning red. Climate patterns are shifting. The stable rainfall cycles that farmers relied on for centuries are becoming erratic. Glaciers, which act as natural water towers for billions of people in Asia and Europe, are receding. But the most dangerous threat is invisible. It is happening beneath our feet. We are draining our groundwater aquifers faster than nature can refill them. Think of an aquifer like a bank account. For 10,000 years, nature deposited rain into these underground caverns. Now, we are withdrawing the balance at a rate that guarantees bankruptcy. In major agricultural zones, from the Central Valley of California to the plains of India, wells are running dry. The ground itself is sinking because the water that held it up is gone. This scarcity has caught the attention of the world's most powerful financial actors. Wall Street does not look at a drying river and see a tragedy. They see a market opportunity. In 2020, a historic milestone occurred that went largely unnoticed by the general public. Water futures began trading on the Chicago Mercantile Exchange. For the first time in human history, the price of water was listed alongside oil, corn, and soy. Investors can now bet on the future price of water. They can speculate on scarcity. This signaled the official start of the financialization of nature. The smart money understands a simple truth. You can live without oil, you can live without copper, you can live without Bitcoin, you cannot live without water. And in economics, when an asset is essential and supply is fixed, the price has no ceiling. This transition from water as a right to water as an asset changes everything. It changes how companies are valued, it changes how nations interact, and it changes the cost of living for every family on Earth. But to fully grasp the magnitude of this crisis, we must look beyond the financial markets and look at the physical reality of where our water is going. We need to understand the concept of virtual water and why the global trade system is essentially a mechanism for moving water from poor nations to rich nations. The flow of water is not just about rivers, it is about the flow of power. The concept of virtual water reveals the hidden architecture of the global economy. When a country imports grain, it is not just importing food, it is importing the millions of liters of water used to grow that grain. Saudi Arabia, for example, largely stopped growing wheat in 2016. Why? Because they realized it was mathematically insane to deplete their precious desert aquifers to grow a low-value crop. Instead, they decided to buy land in Arizona and Africa to grow alfalfa and wheat there, using foreign water, and then ship the crops back to the Middle East. This is the new geopolitical reality. Wealthy, water-scarce nations are outsourcing their thirst. They are buying the water rights of other nations by purchasing their land. This creates a hidden pressure cooker in the global system. We often speak of hydropolitics, or the strategic competition for water resources. There are over 260 river basins in the world that are shared by 2 or more countries. In the past, these rivers were shared resources. In a future of scarcity, they become strategic choke points. Consider the dynamics of a river that flows through multiple nations. The upstream nation, the one where the river starts, holds the power. If they decide to build a massive hydroelectric dam to generate power and store water for irrigation, the flow to the downstream nation is restricted. We see this tension building across the globe. In Northeast Africa, the construction of the Grand Ethiopian Renaissance Dam has fundamentally altered the relationship between Ethiopia, Sudan, and Egypt. For thousands of years, the Nile was the lifeblood of Egypt. Now the control of that flow is being negotiated upstream. In Southeast Asia, the mighty Mekong River faces similar challenges. A series of dams built in the upper reaches have changed the seasonal pulses of the river, impacting the rice bowls of Vietnam and Thailand. These are not military conflicts, but they are profound economic and diplomatic struggles. Access to the river determines whether a nation can feed itself or power its cities. But the crisis is not just international, it is internal. In the United States, the Colorado River serves 40 million people and irrigates over 5 million acres of farmland. It powers the lights of Las Vegas and fills the taps of Los Angeles. But the river is overallocated. The legal rights to the water exceed the actual amount of water in the river. For years, emergency agreements have kept the system running, but the reservoirs Lake Mead and Lake Powell have seen their levels drop to historic lows. This forces difficult choices. Who gets the water? Does it go to the almond farmers in California, or does it go to the suburban homes in Phoenix? Does it go to the indigenous tribes with ancient treaties, or to the golf courses of Palm Springs? This allocation problem is creating a new class divide, the water haves and the water have-nots. We are seeing the rise of water stress in regions that were once considered secure. And this is where the corporate sector enters the equation. Big industry realizes that water risk is business risk. If a semiconductor plant cannot get ultra-pure water, it shuts down. If a beverage company cannot tap the local aquifer, it has no product. This realization has triggered a quiet buying spree. Investment firms and conglomerates are acquiring water rights at an unprecedented pace. In places like Australia, which has the most advanced water market in the world, the value of water entitlements has skyrocketed. We are moving toward a world where the water under the ground is worth more than the land on top of it. But this privatization leads to an ethical dilemma. When water is priced by the market, it flows to the highest bidder. In a drought, a wealthy data center or a high-value vineyard can afford to pay 10 times the normal price for water. A small family farm cannot. The market is efficient at allocating resources to the most profitable use, but it is indifferent to social necessity. This creates a scenario where local communities could find themselves standing next to a fenced-off well, watching their water being pumped into bottles or used for industry, while their own taps run dry. The financial logic is sound, but the social implications are explosive. As we look deeper into this transformation, we must examine how technology tries to solve this and why desalination might be the new oil refining, a massive industry that solves one problem but creates another. Technological optimists often point to the ocean and say, "We will never run out of water, we can just desalinate the sea." It is a seductive idea. Israel, for example, has performed a miracle of engineering. They now produce more water than they consume, largely due to massive desalination plants and world-leading recycling rates. They have turned a desert deficit into a surplus. But desalination has a catch: energy. Separating salt from water requires immense pressure and massive amounts of electricity. In a world trying to decarbonize and reduce energy consumption, building thousands of energy-hungry desalination plants presents a conflict. Furthermore, the process produces toxic brine, a hyper-salty sludge that must be disposed of carefully to avoid killing marine ecosystems. Therefore, desalinated water will never be cheap water. It will be premium water. It sets a price floor. If the cost to desalinate a cubic meter of water is 50 cents, then the value of natural, fresh river water rises to meet that benchmark. This establishes the economic thesis for water as a currency. In the 20th century, the US dollar was effectively pegged to oil, the petrodollar system. Energy was the master resource. In the coming decades, we may see the emergence of a hydro standard. Credit ratings for nations and municipalities will be heavily influenced by their water security score. A country with abundant, self-renewing freshwater reserves like Canada, Brazil, or Russia will have a distinct strategic advantage. They will be the hydro superpowers. Conversely, nations with high debt and low water reserves will face a compounding crisis. Their borrowing costs will rise because investors will view their economies as risky. How can a nation repay its bonds if its agriculture and industry are paralyzed by drought? We are already seeing this in the corporate bond market. Credit rating agencies are beginning to downgrade companies that face high water risks. If a mining company operates in a water-stressed region of Chile, its cost of capital goes up. This is the invisible hand of the market pricing in the blue gold. And just like the oil barons of the 1900s, we are seeing the emergence of water barons. Private equity firms are consolidating fragmented water utilities. They are upgrading aging pipes and infrastructure, which is necessary, but they are also raising rates. In the United Kingdom, the privatization of water utilities has led to a fierce public debate about profits versus service. The narrative is shifting from "government provides water" to "you pay for the service of water delivery." This shift impacts the average consumer in subtle ways. Inflation is often described as a monetary phenomenon, too much money chasing too few goods. But we are entering an era of ecological inflation. When water becomes expensive, food becomes expensive. 40% of the world's food is grown on irrigated land. If the cost of irrigation doubles, the price of wheat, corn, and soy rises. When water becomes expensive, energy becomes expensive. Nuclear plants, coal plants, and even hydroelectric dams rely on water flow. This creates a feedback loop. High energy prices make water expensive due to pumping and cleaning costs, and high water prices make energy expensive. This water-energy-food nexus is the critical engine of the future economy. Investors are positioning themselves accordingly. They are buying shares in water filtration companies, pump manufacturers, and smart metering firms. They are engaging in the big short of the 21st century, betting against the inefficiency of current water usage. But the most profound change will be psychological. For generations, we have viewed water as a background utility. You turn the tap, and it flows. You flush the toilet, and it disappears. We treat it as having zero marginal cost. That era is ending. We are moving toward a future where every litre is metered, priced, and allocated. A future where a water credit might be as tradable as a carbon credit. So, what does the endgame look like? How does this reshape the global map and the balance of power between the East and the West, the North and the South? The geopolitical map of the 21st century will likely be drawn along watershed lines rather than political borders. We are moving toward a bifurcated world. On one side, we have the water-rich, nations like Canada, which holds 20% of the world's freshwater, or Brazil, home to the Amazon, or Russia, with Lake Baikal. These nations possess the strategic reserve of the future. Just as the United States became a superpower, partly due to its vast oil reserves in the 20th century, these nations will hold the leverage in a water-constrained world. They will be the exporters of virtual water, selling grain, beef, and semiconductor chips to the rest of the world. On the other side, we have the water-stressed. Large parts of the Middle East, North Africa, and increasingly, the industrial belts of Asia. These nations will face a choice: invest trillions in technology like desalination and wastewater recycling, or rely on imports for their survival. We may see the formation of new trade alliances based purely on water security, food for energy swaps, water for tech agreements. For the individual investor and the average citizen, this shift requires a new mindset. Water is no longer just an environmental issue, it is the ultimate economic variable. Real estate values will increasingly be determined by water security. A mansion in a region with cutting-off water rights is a depreciating asset. A modest farm with a secure, deep aquifer is a gold mine. We will likely see a migration pattern, a climate retreat, where people move from the drying south and west toward the water-rich north and east. The Great Lakes region of North America could see a massive economic renaissance simply because it sits on the largest surface freshwater system on Earth. Furthermore, we will see the rise of the circular water economy. Currently, we use water once and throw it away. We flush it down the river to the ocean. In the future, this will be seen as economic madness. Cities will become closed loops. Wastewater will be purified and recycled back into the drinking supply endlessly. Singapore is already doing this with its new water technology. Industry will move to zero liquid discharge systems. This transition offers immense opportunity for innovation. The companies that can clean water with less energy or grow crops with half the irrigation will be the Googles and Teslas of the next decade. But the warning remains clear. The transition to water as a currency involves friction. It involves exclusion. When you monetize the source of life, you create winners and losers on a biological level. The price of a bottle of water in a convenience store is already often higher than the price of gasoline. That is a signal from the market that we have been ignoring. The market is telling us that the age of abundance is over. The blue marble is thirsty. As we look forward to the year 2030, 2040 and beyond, the value of your portfolio, the stability of your government, and the cost of your dinner will depend on a single, simple molecule: H2O. It is the ultimate store of value. It cannot be printed by a central bank. It cannot be replaced by a crypto algorithm. It is the only currency that truly matters when the well runs dry. Thank you for watching this deep dive into the future of the global economy. This is the Financial Chronicles. If you want to understand the forces shaping our world beyond just the stock ticker, make sure to subscribe and turn on notifications. We will continue to track the flow of capital and the flow of water. Until next time.